This is a 100% free trading bot course. Everything you need to know. I'm going to show you everything so you can build a trading bot, be an automated trader as an absolute beginner. I promise I'll show you the full steps here. So just strap in for this short video if you want to automate your trading. Actually, I had to automate my trading. Maybe I'm like you where my emotions just got in the way. I was trying to chase these bars up, chase them down, using too much leverage, getting liquidated. This was a few years back. And I met somebody that inspired me to automate my trading because they were trading $1 billion per day automatically. So I was like, okay, let me automate it. Well, there's some steps that I had to take, and it took a couple years to figure it out. So I want to make that process much, much shorter for you. So I'm just going to get straight into it. The process of automating your trading, it starts with research. You have to make sure that you have a great strategy in order to trade. Okay. So you can't just say, hey, I'm going to wake up right now and put a long on, or I'm going to buy, or I'm going to sell, right? That's been getting you wrecked. And if you use too much leverage, well, how much leverage do you know to use? Well, you can actually backtest to see how far down, how far the drawdown is in your strategy. So the process of automating your trading starts with research. And then after you research a strategy, let's say you think of some strategy where when it crosses this green line, buy, and then when it crosses again, sell. You know, that's not going to work in production, but something simple there for you. Well, you can actually test to see if this has worked in the last 10 years, 15 years, 20 years. So the process of automating your trading starts with research. And then after you find a good strategy, you go ahead and backtest it. Backtesting is the process of seeing if that strategy actually worked in the past. And hold on, don't worry. I'm going to show you a ton of places to find unlimited strategies here. And I'll actually rail off a ton of strategies here just so you can have them. I want this to be a free, 100% free course here for 2025. Everything you need to know, I'm going to tell you here in this video. So you know that it starts with research. We're not just going to go run and build a bot that just starts buying and selling. That's crazy. If it was that easy, everybody would do it, right? So you research and you find good trading strategies, and you backtest to see if those strategies actually work in the past. And then if they work in the past, then you build the bot. So instead of running towards the bot, I just saved you thousands or hundreds of thousands of dollars. My name is Moondev. I believe code is the great equalizer. Ever since I figured out how to code, dude, because now I can build anything for the rest of my life. Yes, I got into coding so I could build bots, but before that, I was working with coders thinking that I wasn't smart enough to know how to code. I didn't go to school for the engineering. I didn't do any of this, dude. So anybody can learn how to code, especially with AI these days. And now I just show every little thing that I build. And we've built some huge things. We've built sniper bots. We've built copy bots. We've built trending bots, mean reversion bots. Every single type of bot that you can think of is here free on my YouTube channel. I've shown all the code. There's over 1,700 hours. And in the middle of this video, I'm going to give you a free resource too. So you're not just going to learn everything today. You're going to leave with something, and you're going to leave with code. You're going to leave with a bot. So I want to go through the process of automating your trading. Again, I call it my RBI system: research, backtest, and then implement. Because you never want to build a bot until you know that it actually works in the past. So remember, the process of automating your trading starts with research, then you backtest, and then you implement. And I call that the RBI system. I'll refer to that multiple times here. So instead of running and building a bot right away, like, hey, oh man, I saw this guy on YouTube building a bot, I can build a bot too. Okay, well, if you have a strategy, that's one thing. But still, don't go build the bot right away. You want to backtest that strategy. So I'll give you a bunch of code here in order to backtest. I just want to jam pack this course here and give you everything you need to know. And I'm going to give you some resources as well. So if you don't know how to code, okay, if you don't know how to code, I actually have this video here that you can learn how to code with. And all you have to do is just type in how to code in 2024 for regular people, and you can learn how to code. Python is the language that you'll need. I use the Cursor IDE. Cursor IDE is sick because you have an AI inside of the IDE. So whenever you don't understand something, you can just be like, hey, I don't understand this code. hey, I don't understand this code. Can you explain it to me and give me 3 examples? I'm a new coder. So you can just type in how to code for regular people and you'll find that video, but that's how you code, okay? So I'm not gonna teach you how to code right this second because I think there's bigger things I need to teach you. Well, I also have a video on how to build a trading bot. If you just go over to my YouTube channel, you'll be able to see that video right away. But those are the 2 important videos I wanted to show you really quickly. You can just go ahead and say how to actually build a trading bot. That will teach you how to build a trading bot in full, but I'm going to teach you that as well here. So just if you want if you want to do some extra credit. Now, this is a really sneaky tip that I just told you about. Asking Cursor, your IDE, how code works and to give you 3 examples of it. There's nothing you can't learn these days. Now, I want to show you something else really quickly. If you type in Harvard CS50, they actually have their whole computer science class. You can see it's 24 hours. They literally have their whole computer science class for free. Computer science is how you learn how to code. So if you didn't go to Harvard, you don't have the money to go to Harvard. I didn't go to Harvard. I didn't have the money to go to Harvard. I didn't get into Harvard. I didn't have the grades to go to Harvard. None of that stuff. If you want to go there, dude, just go watch Harvard CS50. Now, another one, Andrew NG Stanford. So you have Harvard and now you have machine learning Stanford course. I've given you 2 great resources here that if you want to do some extra credit here, boom, those are 2 great resources. Now I'm going to try to give you everything else that you need in order to automate your trading right now. You probably want to have a Discord community of other algorithmic traders, but we'll get to that later. I want to rail through some places that you can come up with new strategies, because remember, the process of automating your trading starts with research. It's the RBI system: research strategies, backtest those strategies. Now, if they work in the past, they might work in the future. They're not guaranteed to work in the future, and most people are going to be like, oh, look at this backtest, it works in the last 10 years. That doesn't mean it's going to work in the next 10. So you have to have a strategy that will allow you to make sure that you're not 100% dependent on backtests, dude. So when I implement with tiny size, and I kind of incubate the strategies, meaning I let them run to make sure that they actually match up with the backtest. So let me teach you some places that you can find some good strategies. Because research, backtest, and then implement. Okay, I'm actually going to rail off some ideas here. Let me just wait for this timer to end because somebody's going to pop up on me, but I'm going to rail off a ton of trading ideas and then I'm going to give you a place you can find your own.
If you want a pair of shoes and they're at the store, they're really at the store. You just don't have it yet. It ain't like that shit don't exist. It's just really at the store. That's how I looked at my whole life. If I want it, if I believe I can have it, then that's my reality.
We won't talk about the mind here too much, but that's Big Sean saying, if you want it, you can. If you've seen it's happened before, then you can have it, dude. If it's been done before, you can do it too. So I hope you believe in yourself, but take out your note sheet right now because this might be over your head, but eventually this will make sense. These are going to be alpha generation ideas. Alpha meaning make money, meaning, hey, this is going to beat the market. It's alpha on top of the market. So if you could put your money away for 10% in the S&P, alpha's on top of that. Anyways, these are a bunch of strategies, things to look for, and just get out a notepad right here because I'm going to rail these off and this might be too advanced. But anyways, when you're backtesting, look at expectancy. Make sure that it's over 0.2 expectancy. Here's a interesting idea, the gap and go model for crypto. Now with stocks gap, crypto doesn't gap. You can actually remove time and only trade specific times. What if you only traded 9 to 5 in crypto? What if you built an AI that could backtest for you, research and backtest for you at all times? Well, actually, PineScript is TradingView's language. If you go to TradingView here, you can have every single one of their strategies as well. If you go to indicators here, let's see, indicators, you can see these strategies. You can actually open up their code and get all of their code. So any indicator on TradingView, dude, look at this. I can just go here and then I'll go to ChatGPT and I'll say, hey, please convert this indicator from PineScript to Python. Python is the trading language you use. And you can literally have every single indicator from TradingView converted into Python for you. That's nuts. Look into the stochastic RSI, the money flow indicators, mean reversion, exhaustion gap strategies, pairs trading, liquidation hunting strategies, Bollinger Bands, the turtle trading strategies, the 200 moving day average, seasonality. Look into seasonality, timeanality. I know that's different. What happens when there's 4 down days? What about just trading Monday, Tuesday, Wednesday? What about buy and hold with different risk allocations? There's a bajillion trend following ideas. What about the adjusted trend? How about a carry trade? What about VIX strategies, volatility index strategies? Again, just write these down. They might not make sense now. Genetic algorithms, grammatical evolution. These are algorithms that can create other algorithms. What about liquidation trading strategies or open interest trading strategies? Cross-sectional momentum. Have you tested that? Have you actually tested the sell in May and go away thing? I've tested that. These are things that you can do. You can take any idea that you or your friends have and backtest them. You can see I just had AI code out the whole QQE for me. And that's insane because there are probably tens of thousands, if not hundreds of thousands of indicators. What about some triple EMAs or Bollinger Band breakouts? I have a list of these ideas. I promise I'll let you leave with this list. What about being a market maker? Have you looked into Rob the Quant from back in the day? Dude, there's so many opportunities here. Somebody came in and told us about the real relative strength, which is one of Jim Simon's favorite. You could trade different market regimes. That's what Jim Simons did. Jim Simon's here. If you don't have a GOAT to follow, this is my GOAT. 31 billion. He ran it up to 31 billion, all from automated trading. It's absolutely insane. Have you looked into the Elliott waves yet? I know a lot of people are trying to, but have they automated? Volume oscillators, Scheichen money flow. These are just ideas I have on my list that I haven't even attacked yet. Some of them I have. Keltner channel breakouts, Hammer and Hanging Man. These are just random ideas, and we have unlimited of them. But where do I get these ideas from? Let me give you some. Remember, it starts with research, backtest, and then implement. Research, backtest, implement. Research, backtest, implement. That's the RBI system. That's how you automate your trading. So I was just trying to give you some ideas that you could jot down here, and I'll give you a resource here at the end. But I want to give you a place where you can actually do your research. So let's go to Google Scholar. And for those that don't like to read, well, guess what? We have AI now. So let's say trading strategy, you can start there. Or you could say, hey, AI, let me go ahead and give me some keywords here. So you can see you can turn any indicator on TradingView into Python code. Please, I'm new to algorithmic trading and I would like to have like 20, 30 broad ideas that I can then search on Google Scholar that should bring me a bunch of different papers on trading strategies. So just give me like 20, 30 concepts of trading strategies that I can then look up on Google Scholar kind of as keywords, you know? So you can just ask AI, hey, give me some search terms here for Google Scholar. Google Scholar is where all academic papers are launched. And academic papers are written by master's students, PhDs, etc., etc. And they have a ton of trading strategies, optimal trading strategies, supply and demand zones, or supply and demand dynamics. That's another strategy for you, supply and demand zones. An anatomy of trading strategies, evaluating trading strategies. So now you can go here and see, okay, now I have a list here. Is it giving me a picture? That's funny. Haha. Let me just throw it into this AI. It's giving me a picture, so we'll see what it does there. That's going to be interesting. Didn't ask for a picture, but that's okay. Let's go ahead here and say cursor, because I have Claude Sonnet 4. I use ChatGPT for O3 and then Sonnet 4 here. Okay, so you can see here, it's going to give us a ton of different strategies here. So now these aren't, maybe you can start backtesting these, but you have to get like a deeper strategy, right? Okay, look at this. This is actually kind of nice. Trading strategy concepts. Haha, that's funny. Let me go ahead and just throw this on the Twitter. Why not? You know, I got it. I got it. Trading strategies. Strategies to look into for automated traders. Okay, that was sick. I got a Twitter here, Moondev on YT. Anyways, so you can see here that we have an unlimited wealth of strategies that we can look up. So I could take this mean reversions trading, and then we go to Google Scholar, but that's not the only source. Google Scholar first, because I feel like that is the most care. You know, people that write papers, they put the most care into them. It's probably for like a class or something like that. Now, are there going to be like, hey, run this exact strategy? Probably not, but it's all about idea generation. Research, research, research for ideas. Ideas are so, so important. And you can just read this paper. Oh, you're too lazy to read this paper? Okay, that's fine. Because you can go here and say, what does this paper say? And maybe I'll go to a new ChatGPT so it doesn't write me another, give me another thing. What does this paper talk about? Please go ahead and briefly tell me. And sometimes it's too long, but this one's not too long. Okay, so all you're trying to do is come up with ideas so you can build a list, a research list of a ton of ideas that you can then go backtest. Backtesting is coding, and that's why I showed you how to code earlier. If you don't know how to code, don't worry. I'm going to give you a template that will show you step by step how to build a backtest. But after you've done your research, okay, you have a list. You just keep going in that circle, right? Let's go back to cursor here. You have all of these that you can look up on Google Scholar and YouTube as well. And then here's a bunch of books here that you can look into. So Market Wizards is a really good one. So let's go to Amazon here. Market Wizards, there's actually 4 or 5 of them. Market Wizards. Definitely got to read these books, man. Definitely got to read these books. If you want to hear from probably 50 great traders, Market Wizards interviews with top traders, they have maybe 3, 4, maybe 5 of these books. Really great.
Make a choice. Like, you just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, the universe is going to get out your way. It's like, it's water. It wants to move and go around stuff, you know.
Okay, so now you know a series of books. There are a ton other books like The Man Who Solved the Market, Dark Pools, Flash Boys, Advanced Futures Trading Strategies, The Quants, The Complete Turtle Trader, How to Trade in Stocks, A Random Walk Down Wall Street, Fooled by Randomness, Best Loser Wins, One Up on Wall Street, The Black Swan, What I Learned Losing $1 Million, Option Volatility and Pricing, Trading in the Zone, One Good Trade, Bollinger on Bollinger Bands. If you need some technical books, okay, Learn Python 3 the Hard Way, Clean Code, Bayesian Statistics, The Fun Way. Do you need to be a math nerd for this? No, absolutely not. Practical Statistics for Data Scientists. There's a couple books you can understand things and then you can keep it moving. I've got some mind books as well, but I'll give you that in the resource later. Like I said, I'm going to make sure you leave with a really solid resource here. You can look into AI agents for trading. That's really, really fun. And I think there is absolutely something there. Like I mentioned before, the RBI system, research, backtest, and implement. I actually have agents that can do that for me. And it's a very, very interesting project I've been working on. But I have a few frequently asked questions I always get. So I want to answer them. What's the best language for algo trading? Python, definitely. Where to learn algo trading? YouTube. I have over 1,700 hours of video tutorials showing you step by step. I also have a boot camp if you want that. But I want to make sure that you learn everything here in this video. But that's Algo Trade Camp. There's a link below. You can just watch that video on there if you want to understand it more. Let's go and answer some more questions. Do you run your bots on your computer, or how do you run them 24/7? So when I was getting started, I just ran them from my computer for the first year because I needed to keep a very keen eye. I needed to make sure to look at my bots and see the errors. So I just ran from my computer. So for now, just run from your computer. And then when you're comfortable, there's a super, super easy way that you can run them on something called a VPS. It's a virtual private server. But I don't want to bog you down with complexity. It's super, super simple, and I show you step by step. So don't worry about that. What's your bootcamp's refund policy? It's 100% money back guarantee forever. Why don't you believe in hand trading? I just believe that at some point you're going to be put on tilt, like that guy that lost $100 million in the last 2 weeks. He got put on tilt and he lost all of his money. What's your opinion on machine learning? I love machine learning, and that's what I got into trading for. That's kind of the strategy that got me into trading was, I could have a machine learning model who can trade better than a human. So I study a lot of machine learning, and maybe I'll do some today. What strategy do you suggest we start with? I suggest the RBI strategy that you implement into your life for 2 to 4 hours a day, because then you're always researching, you're always back testing, you're always implementing. That's what I do every single day, and you can see it here. How do you backtest algorithms? I'm going to go ahead and give you this piece of code that will help you backtest, and then I'm going to show you how to backtest. Where do you get data from? What's cool about crypto is you can get data from Coinbase, you can get it from Hyperliquid, you can get it from all the exchanges, Binance, whatever. How do you get in touch with me? You can get in touch with me in the chat here. Actually, I'm in the chat all day on my lives. Yo, what's up, Texas 777? What's up, JHI? J-Hi? How are you, bro? How often is the bootcamp updated? Almost weekly. Is the bootcamp for advanced coders only? No, that's what's great. I teach you how to code as well. Why do I teach algo trading? I teach it because I had the same problem that a lot of people have. Just trading too much size with emotions and losing money by just getting on tilt, and it just happens. I always tell you this story. Like, I would go like 30, 45 days of good trading, and then one day it would just like, boom, didn't sleep enough, or whatever. I didn't eat enough, or I got to go to the bathroom, or whatever it is. It's like, we're not meant to be traders, in my opinion. So yeah, dude, I just wanted to give you a quick little overview, and I want to go ahead and now show you how to take one of those ideas and then backtest it. So let's go here and let's give you that resource. The resource here is actually at moondev.com, just moondev.com. It's free. It's a free roadmap, and you can get a lot of the things that I've covered today. For example, the frequently asked questions. You can jump into our Discord community, the roadmap, a full roadmap here. So this is all 100% free, like the title says. I want to make sure this is a 100% free course here. And frequently asked questions, some more questions probably answered you have. My RBI system, the process of automating your trading, research, backtest, and then implement. And right here, there's actually a piece of code that will show you how to backtest. So you can see here, copy. And what I'm going to do is then go here to the alpha generation and strategies. And these are some of the ideas that I was telling you about. So you can see a Bollinger Bands, Slow Turtle. What I want to do is pick one of these and then show you that code I just copied onto my clipboard and backtest it with you, because that's really where the game is. It's researching and backtesting, research and backtesting. So you can see here we have a backtest that we were playing with a couple days back, and I'm using Cursor again, of course. And you can see that this strategy here returned 50%, while the buy and hold returned -13. So if you were buying and holding, you would have lost 13%, but this strategy gained 51%. So that's pretty good. So I want to go ahead and build a new one. I'm going to call this BB bdown.py. And I think there's a couple Bollinger Band ones here, but you can see I just copied this code in here. This is my template code that I have in that free resource that is on moondev.com. I just pulled it from here in the backtesting part of the RBI system. Intraday Bollinger Bands. There was a Bollinger Band one that I wanted to look into here. Nate loves the Kalman filter. Kalman. So I want to do a Bollinger breakdown and look into Kalman filter. Kalman filter? I don't know how to say it, but can you tell me more about this Kalman filter and how it can be used in a backtest? In a backtest. In a strategy. What's going on here? Can you tell me about the Kalman filter and how it can be used in a trading strategy? Kalman. Okay, there we go. So let's learn a little bit about this. Again, this is from my idea list. And then Bollinger Band breakout 2.7 SD. I think that means standard deviations. Okay, let's read about this because this is the game. This is the game we're playing. Great question, Munda. Kalman filters are incredibly powerful for trading strategies. Let me break this down for you. What is a Kalman filter? A Kalman filter is a mathematical algorithm that estimates unknown variables from noisy, uncertain observations, continuously updates predictions based on new data, reduces noise while preserving the underlying signal, adapts dynamically to changing market conditions. Think of it as a smart way to smooth price data while being responsive to real changes. How Kalman filter works in trading. Dynamic price smoothing. Unlike simple moving averages, Kalman filters adjust their smoothing based on market volatility, reacts faster during trending markets, smooth more during choppy sideways markets, trend detection, better at identifying when trends start, and less prone to false signals than traditional indicators, can estimate trend strength and direction. Support and resistance levels, dynamically adjust support resistance lines, more accurate than static Bollinger Bands. Adapt to changing market volatility. For your Bollinger Band strategy, instead of static bands, you could use Kalman filtered price as the center line instead of SMA. Dynamic bands that adjust based on filtered volatility. Breakout signals with less noise. Other applications, pairs trading, filtered the spread between two assets, mean reversion, better identify when prices.
You're up 2-0. Job's not finished. Job finished?
I don't think so. Volatility estimation. Okay. Advantage over. All right. So I have a Bollinger Band breakout strategy that I would like to try. And I want it to be a breakout and breakdown both ways. And I want to use the Kalman filter here. And also I want to test between 2 and 4 standard deviations. The idea had 2.7 standard deviations. So let's make that the original one. But go ahead and update this code. Thank you. All right, so that's just an idea that I came up with right now based off of this resource. And there's a ton of ideas there, but there's unlimited papers out there. There's unlimited ideas, and yeah, you can kind of learn it all, bro. You can kind of learn it all on the internet for free. Yo, what's up, Dubin? How you doing, bro? 777 is my light and my salvation. Whom shall I fear? Ooh, I like that. I like that a lot. Buy on 21.3 pass. That's what the idea said. Perfect. Let me enhance your Bollinger Band strategy with the Kalman filter and bi-directional trading. This is going to be epic. This is going to be epic. Dubin, this is going to be epic, bro. Texas, it's going to be epic, bro. Jay High, it's going to be epic, bro. Okay, let's see what she did. Kalman filter implementation. Custom Kalman filter class that smooths price data intelligently. Reduces noise while maintaining responsiveness to real price movements. Uses Kalman filter prices for Bollinger Band calculations. Bi-directional trading, long positions. When price breaks above upper Bollinger Band, short positions. When price breaks below lower positions, lower Bollinger Band. Both directions now active instead of just short only. Enhanced parameter testing, standard deviations testing 2 to 4, your requested range. Keeps your default at 2.7. More refined optimization ranges for better results. And we got some debugging here. Good. Good. We need debugging. All right, let's also go give it the data that we have here. So we've got a bunch of data. Let's go ahead and just give it this idea here. This is not an idea, but the way of using our data. We are live. What's up, bro? So you can see here that I have this piece of code that allows me to handle data in two different types of data, because we have two different data types that essentially change. They have different headers. Okay. So please go ahead and implement this type of data code into this. Thank you. We are live. Perfect, Moondive. I can see you need the adaptive header detection to handle different data formats. Let me integrate that. Thank you. That's exactly what I want. So you can see how AI just does everything for me. I just bring the ideas. I just bring the research. Okay, accept. Now let's see if it has the data that we want to use. Let's go to data path here and let's grab some data. And let's start on the 70-week. Here's the 1 minute here, copy path. 1 minute, it's going to be harder. It's harder with smaller time frames. So like 1 minute is going to be harder than 1 day, in my opinion, from what I've seen. So let's start with the 1 minute and just test a bunch of ideas here. And we're going to have to get the code working first. There's going to be an error. I've got this error, but sometimes we have a trailing comma on our data, so I think that's the error. I want in. Where do I start? I'm showing everything here today, so I've showed it in the last 30 minutes, and now I'm building out some back tests. You can also join the bootcamp if you prefer. The bootcamp is here. If you want me to keep holding your hand and have a closed community and give you a bunch of code and show you step by step over the next 15 days, you get access to an unlimited wealth of knowledge here, and you can read what everybody has to say about it, but there's a 100% money back guarantee, so it's kind of a no-brainer. If you do want to join the bootcamp, just go read what others have to say, because I'm just here showing you guys everything for free on YouTube, and I don't really need to sell you anything. If you want to join to get more information, that's on you. And we are happy to have you. And there's hundreds of people just like me and you who have put really, really great reviews on the website. So, and we have a folder, a folder of hundreds more, but you can see this just goes on forever. So you're welcome. My pleasure. My pleasure. The whole goal here is to show you everything for free on YouTube, and just over time, people are like, please, please, please build a course, build a community. And it's like, okay, cool. I'll do that. What's up, Amen? How you doing? Yo, 777, Tom. How you doing, dude? For I know the plans I have for you, declares the 777. Plans to prosper you and not to harm you. Plans to give you hope and a future. Is this pre-recorded? Maybe, dude. I'm having problems with a bot. Mine don't follow a strategy. They follow a signal channel. Ooh, that's tough. I wouldn't do that. I would revert. I would revert, bro. I'd revert. I wouldn't follow a signals channel. I mean, what? That's your strategy though, so I don't want to tell you anything. I don't want to tell you anything. It's just like signal. Nobody's gonna share their edge. Is my thesis. Like, I don't sit here and be like, yo, run this bot because it's my most profitable. Because if I did that, my edge would go to 0. Moon City, what's up, bro? What's up, little bro? Little bro, Moon City. Moon Dev created one. What's up, dude? How are you? Good to see you. Moon City. Moon City, bitch. Moon City, bitch. Okay, so you can see it should work now. Let's go ahead and check it out. Not quite, not quite. So we can just do this. Some prices are larger than initial cash. Okay, I see what's going on. Let's make sure initial cash is a mil instead of 100,000. Wow. Yep. I'm getting a bit of a bug here. Please fix. Thank you. So we got AI just grooving all day for us, which is nice. Got it, Moon. The issue is that the backtesting framework, self.data.close, is already in an array. Nice. All right, here we go. I don't want all these though. You can see some of the debug prints. Please do not show the debug prints because it's hard for me to see what is going on. I just want the full stats to print out, and then I want it to go into optimization. So it should run the original backtest, print out the full stats, and then I want it to go ahead and optimize and then print out the full stats again. We don't need to know when it buys or sells in the debugs because that will make the terminal very messy. I'm using it as a side thing. Main thing is strategy and try to automate. Nice, dude. Which AI do you use? I use Claude. Sonnet 4. I use some GPT. Oh, I also use ChatGPT as well. But for the most part, I use Claude Sonnet 4 inside of Cursor. That's where I use that's where I usually am. You can make it backtest too. Yeah, dude. That's what I'm doing right now, actually. Okay, there we go. So you can see that it's still printing out some of the lines though, and we don't want that. So Moondev's Kalman Bollinger Band strategy. Kalman's. Don't print that. And don't print that. Okay. Yeah, dude, you gotta make it back test. Okay, so you can see here the strategy doesn't work. Why? Because the profit factor is under 1, expectancy is negative 0.83. So that strategy doesn't work how it is right now. Exposure time is unbelievable. Return is 11%, negative 11%, and the buy and hold is negative 8%. So that strategy is not working, dude, for that time frame. Do I want it to optimize? I'm not even going to optimize it because it's not even close. So let's go ahead and try some other data here, because that was 1 minute over 5 weeks. Some funny bunny data. So let's try Solana data here, copy path. This is daily data for 1,000 weeks. So an entirely different test. 5 weeks, 1 minute versus 1,000 weeks of daily. It's crazy difference. But this is the game. And one time I had somebody email me, be like, yo, Moondev, this stuff doesn't work. Algo trade doesn't work, dude. He is like, I tested 10 strategies. I back tested them and only one worked. I was like, congrats, bro. That's fire. 10%. So just know, just have your expectations straight that if it was super easy to find winning strategies, like this is totally just an idea I just pulled out my ass for today. And you know, if it was super easy to find winning strategies, everybody would do this and everybody would be billionaires. So you can see this one's better here, 0.88 profit factor, expectancy negative still. So it's a losing strategy. So I'm gonna keep it pushing. I'm gonna keep it pushing, dude. I'm gonna keep it pushing. Let's see what it does on the optimization, just because it is a little quicker. It looks to be a little quicker. Help me generate an idea to use the Kalman filter for a short only strategy. And then let's go ahead and yeah, give me your top 3 ideas, and then I will decide which one we want to go ahead and build. So this is now optimizing. These results should be better, but it's a little tricky with optimization. You don't want to over optimize. Like if you optimize long enough, you'll find something that's good, and that's like, it's a double-edged sword. It's like it makes you feel good, but all right, so this one is profitable here. You can see a 1.24 profit factor, a 0.7 expectancy here. These are the optimal parameters here. Sharp ratio is only 0.34. The return's crazy, 1,383%. So we did find a profitable one, which is cool. That was 1 out of 2. And that was very quick. But I also want to look into some other ideas. Now you've seen all the code. Just to make sure you have all the code. Screenshot it, whatever. And this could be interesting. It could be interesting to look deeper into. Let's go ahead and read through these. Kalman mean reversion sniper. Use a Kalman filter to create a dynamic fair value baseline. How it works. Kalman filter creates a smooth trend representing true short signal when the above price deviates significantly above the Kalman fair value. I actually like that. Why it rocks. Catches overextended moves that are likely to snap back. Kalman momentum killer. Use the Kalman filter to detect when uptrend momentum is dying. How it works. Apply Kalman to price. Then calculate the slope rate slope/rate of change of the filtered trend. Short signal when Kalman slope turns negative while price is still elevated. Edge catches trend reversals early before they become obvious. Kalman RSI divergence hunter. How it works: Kalman smooth both price and RSI, looking for bearish divergences. These all sound great. Please build all 3 of these files and look at this BBB down file to have a template, essentially. You know how the data is set up, you know how we need to accept multiple headers, etc. So go ahead and build all 3 of those files for me. Thank you. Okay, what do you mean by that, Moondev? That you using Claude Sonnet 4 inside Cursor AI? Please explain, brother. Well, it's Claude Sonnet 4 is right here inside of Cursor AI. So this is my IDE where you code stuff, and Claude Sonnet 4 is right here. It's because I use this tool called Cursor. If you don't know of it, it is like Visual Studio Code, but with AI implemented. And it's in Chinese. It's in Chinese because, do I live in China? No. I don't. What's up, Art777, bro? Much love to you. Good to see you, dude. Good to see you, dude. Okay, so now you know how to backtest, dude. You know, definitely get Cursor if you don't have it. It's like 20 bucks a month. It's worth it. So mean reversion here, Kalman mean reversion, and then Kalman momentum killer. So let's go ahead and let her work for a second. Moving? Damn, she's moving too. She's moving, she moving, she moving. She constantly moving. She constantly working for us. She's working, she's working, she's working. So we got 3 back tests underway, and we already built one. And this one didn't look awful, honestly. I'm gonna put the data here. Actually, I think this doesn't look too good. This doesn't look good. 99% drawdown. It's not good. It's just a little sneaky because, like I said, you can when you optimize, you can go ahead and make anything look good. So I'm not gonna lie, I love having your videos on. Thank you, bro. I'm currently generating my own alpha strategies for some trading bots. I'm gonna build 777, dude. Thank you, bro. Jay High, much love to you. Okay, so you can see here, your 3 Kalman strategies are ready. So Kalman mean reversion sniper. Okay.
It's been real. Don't get involved if you ain't gonna die for it. Take this. I bought some hollow tips for your homeboy.
So let's go ahead and try all these. Why not? They're all right here. So let's go ahead and try this one first. Oh, I gotta say accept all. Accept all. Okay, Kalman RSI divergence. Short only strategy using Kalman smooth RSI. Yo, what's up, Trent? Okay, let's go ahead and run this. So nons here, we got nons, and that's no bueno. That's no bueno. That's no bueno. It looks like we got NANs for everything, so that means that there's no trades, so we got to figure out what's happening here. 777 doing a rolling stop. Did you try the task system in here? Yeah, I tried it yesterday. It was dope. It was dope. It was dope. You're absolutely right. No trades means our divergence detection logic is too strict. I would be curious how you use that for algorithmic trading and trading bots. Like that's what I'm really trying to understand, because while it was dope, it was for like SOCOM, you know? So I just got to figure out how to make it useful for the stuff that I'm building, essentially. Perfect. I fixed the RSI divergence strategy. Overly complex. Okay. Let's go ahead and try it out now. Still no dice. No trade still. So please go ahead and help debug this. Thanks, MoonDev. Much appreciated, bro. I understand now. My pleasure, dude. Still no trades means we need to debug this step by step. Please, please, please. Perfect, MoonDev. I've simplified the strategy to test the basic RSI. Okay, so you can go in this loop forever. I just want to show you how to get this done here and how to bring your ideas to life. Okay, so you can see entering short. It looks like now it's definitely hitting. I really think you need to try out the task manager that is in Claude Code, which can integrate. Harder for me on Windows. I'll try it, dude. I want to know your thoughts. Like, how does it relate to the, like, how can we use it in, my system, RBI. That's what I'm just following every day. So, yeah, I haven't figured out what the need is yet, I guess. Okay, you can see some orders are entering, or it says entering short here. So we can remove these debugs so I can see the actual stats. Including Claude Squad, which runs multiple Claude Code agents. I'm still trying to figure out how you use it, bro. How you use it for production in building algorithms, trading bots, etc. Because that's that's my focus. So I probably just need to give it some time and dive deep into it. But I feel like in your head how it would be applicable to what I do. Perfect. Debug prints removed. Thank you. All right, so okay, now we got some trades. You can see max drawdown 99%. Well, first, understand the task managements are not MCP. They allow Cursor or other agents to stay focused on the master plan. Yes, I understand that. Win rates 16%, so pretty trash here. Trash strat. Exposure time. It blew up. It blew up. It went to 0. Let's see what the optimization does. And this one is no good either. You can see the expectancy is -8. Okay, so let's just move on to the next one. Trash that idea. Boom. Let's run this one. Remember, it made us 3. So we'll just play with the 3. Okay, this has the same problem, actually. So let's go here and say, I really like this idea, but you can see the NANs means that it didn't enter any trades. So let's go ahead and update it so it does enter trades. Sure, the limited context window on cursors main failing, and you try to troubleshoot something, it blows the context, forgets the big master plan. The problem is that I don't have the same problems you do because you're working with like a big company and probably gigantic code bases, and my code bases aren't gigantic. Because if I find a backtest that works, then I split it out into a bot, and my bots are all under the window. So that's why I'm really trying to pull it out of you, dude. Like, what's your idea here? What's your idea? Like, what's your idea for algo trading and quant stuff? Because I know there's something in there, dude. Okay, this one did have some trades. I only had one though. And this was the optimized version. Okay, let's go ahead and say accept here. So this should be an update now. Okay, so you can see this is a much more trades, but kind of bad. No, not kind of bad, very bad. Very bad. So we're like 1 for 4 right now, and that's still good in my mind. You can see this strategy now blows up. Let's go ahead and update it a bit so it is much more profitable. I want to figure out how to use the Kalman filter because it came from somebody that I really respect in this game. Yikes, Moondev, that strategy is destroying performance. Return is brutal. Brutal. Let me fix this momentum killer to actually be profitable instead. Come on, Trent, give us something, bro. How's it apply, bro? How are we going to use it? Task management system. Perfect, Moon. I've completely revamped the momentum killer. All right, let's let this optimize just for funsies. $30K lines. That's a lot of lines, bro. Okay. I can see why you're using it. 30K lines. God damn. God damn. 30K lines, bro. That must be all your stuff you've ever put together with Trading Bots all in the same file.
So don't waste it living someone else's life. Don't be trapped by dogma, which is living with the results of other people's thinking. Don't let the noise of others' opinions drown out your own inner voice. And most important, have the courage to follow your heart and intuition. They somehow already know what you truly want to become. Everything else is secondary. Stay hungry, stay foolish.
Interesting. Interessante, bro. Okay, so I've completely revamped the momentum killer to be much more selective and profitable. All right, so I mean, this is an interesting idea. I just wanted to see a couple ways to work with the Kalman. I want to go ahead and move on to the next one because I ran this. Non. Actually, what you did set up nons here, so let's get something in between the two. It looks like we are actually getting more NANs here, so let's go ahead and let's do something in between the two because we want to get trades, but we don't want it to be a loser like you sent. Exactly right, Moon. I went from one extreme to the other. Let me find the sweet spot. Generates trades, but doesn't blow up the account. So what did she do? Balanced approach, best of both worlds. Removed multi-complex or complex multi-confirmation requirements. Too simple but effective conditions. Should generate trades without being too picky. Moderate thresholds. Okay, still poor. Still poor. All right, I'm going to go ahead and let this play out just because it only takes a few seconds. And it optimized to the one that was one. All right, trash strap. Let's move it. Let's move it or lose it. Okay, so now we have this mean reversion one. Short only. Okay. Let's run this and get the error. 162 trades. It blew up as well. Return. Optimization. I like the idea of using a Kalman filter on a mean reversion strategy, but this one did poorly. Can you update it? Absolutely, Moon. That mean reversion strategy is bleeding money badly. The concept is solid, but the execution needs a major overhaul. I've found that simpler systems work better. That's all I'm going to say. But, I also don't have 80 years of coding experience like Trent does. Perfect, Moondev. I've completely overhauled the mean reversion strategy to be more much more selective and profitable. Before, the 5% deviation was way too aggressive. 12% deviation. After, 12% deviation. All right, let's see how this one goes here. All right, next I want to dive deeper. I want to dive deeper into some machine learning stuff. I've been itching to play around with my data I have here. So you can see these ones didn't do too well. I think the first one was the best one. Actually, before I do that, I want to go back to one yesterday. Let me go ahead and make sure that you see all this code here, because this was the best one. But it had a 99% drawdown, so I don't trust it too much. So I'll show you the code really quickly just so you can have it. But there might be something you can pull from it. And that's the whole thing. That's why I feel so confident sharing my code, is because, like, number one, nobody's here. Nobody's been here for 1,700 hours except me. But number two, it's like one piece of this code could change your system forever. Or one idea, one thing that I say, I don't know. Okay, let's go back to interest short here, and please make another file called 64 interest short Kalman, and let's implement the Kalman filter into this. That's the best way to learn, dude, is just go at it with your expertise, or the way you know how to trade, or have learned how to trade, or know how to code, or just get up and going. Like, the RBI is just a framework that people can follow, but at the end of the day, if Trent finds $1 billion bot, he's not going to share it. I'm not going to just show people exactly, like, boom, this is how you make a ton of money. I'm not a financial advisor. That actually reminds me here to show this. But at the end of the day, it's like I can set out a framework for everybody, the RBI system, and you kind of have to discover the things that are going to work for you and your lifestyle. Because maybe you have a full-time job. Maybe you're not able to monitor your bots. Maybe you're not able to make intraday changes. Maybe you're not able to backtest all the time. Maybe, it's just like, I can introduce you to algorithmic trading, but if I put $1 million in the corner, it's going to be gone quick. Are you using TALibs Python library instead of Pandas TA? I use both. Just whatever's needed. Okay, so I'll create a new file called 64 intraday short Kalman. Okay, perfect. There it is. And I just wanted to see, because this was a winning backtest yesterday, or maybe 2 days ago. And I'll make sure you get all the code here. It's 50% return. It only works in this regime. So, like, it's 17 days. It's not very many days, but again, just one piece of this could change your system forever. 70 weeks at 5-minute data. 70 weeks is pretty long for 5 minutes, though. Now, the regime has been kind of choppy, so. FS Trent says, if I built $1 billion bot, I would set you up with a sick PR party house. That when I come through, we party and brainstorm it. That's fire, bro. Appreciate you, dude. Appreciate you, dog. $1 billion bot. $1 billion pussy. Step one of not selling for a loss is not buying unless you are certain to win.
Limited, so don't waste it living someone else's life.
Okay, so they've created a new one, custom Kalman filter, simple implementation for price smoothing, adjustable process and measurement variance parameters, real-time adaptive filtering, enhanced strategy logic, uses Kalman filter prices instead of raw prices for threshold calculations, smoother signal detection with less noise. Okay, let's go ahead and see it, dude. Okay, so this did not improve it, unfortunately. But let's see how it does with the optimization. This might take a little bit of time. So I don't know if you've noticed, but there's no ads on my YouTube anymore. Because, you know, me and YouTube, our days are numbered. So make sure, here's the ad. Here's the YouTube ad. Make sure to jump on over to Twitch, bro. I know it's a dying platform and I hate to have to leave YouTube, but you know, it is what it is. They make the rules. They don't want any more of this trading bot stuff shown. And I don't know why. It is what it is. They won't tell me why. So that's ad number 1. And watch this video is ad number 2. I'll be back. If you fucked up some trades due to your emotions, or you just missed some trades because you weren't there, it's time to automate it entirely. In the next few minutes, I'm going to show you how to automate your trading. Even if you're not technical, you've never done anything technical in your life. I was just a degenerate like yourself prior to this. If you don't watch this full video and you just go back to gambling in this casino, trading in this stock market or crypto market, yes, it's totally not gambling, you degenerate. I was the exact same way as you until I realized, hey, a normal person can algo trade, a normal person can automate their trading, so why can't I? So if you fucked up 2023 and you don't want to do the same thing here in 2024, don't do the same shit as you did in 2024. Imagine if you could turn every trading decision into a winning move. No matter what the market throws at you. In the next few minutes, I'm going to show you absolutely everything. I'm going to reveal all the secrets that the trading elites don't want you to know. They're guarding it fiercely. The secrets that will transform you from a emotional degenerate trader that's buying highs and selling lows and getting wrecked every single day into a precise automated trader that can go live their life, enjoy their time with their friends and their family, do the activities they want to do because they know they have robots trading for them. Even if you've never been technical, I will show you the exact secret. Have you ever been caught off guard on how quickly your emotions just sabotage your trade? Obviously, you have. You probably bought up here and then sold down here, right? It's a thing that we do as humans. It's a common struggle. Don't worry about it. I was in the same boat as you. And stop looking over at my AI. We're not there yet. Later, I'll show you my AI that does a lot of this for me. But doesn't it make sense? You're a human being. These charts are not meant for us to trade. It's not your fault. Our brains are wired to let emotions take the driver's seat, especially under stress. Do you see how much better your trading will be if you can remove those emotions? Yes. When you're emotional, you can't think logically. You do things that you shouldn't have done. And you know that. You regret it later, right? You get into a fight and you say some things that you might not want to have said. And then you look back, you're like, oh man, I was just emotional in that moment. Yeah, of course. That's how it goes over and over again in real life. Now you bring those emotions to the charts and the casino. Whatever it is, I'm working, right? Oh yeah, I'm working, trading these. Come on, bro. You know you're not working. This is gambling if you're trying to do it by hand. And I get it. It's frustrating. Emotions take over, and let's face it, this emotional roller coaster can make trading a nightmare. You probably have a good strategy, or you've heard of good strategies, but executing them, no way. Emotions just wreck everybody. Every time you trade, those familiar feelings just resurface and cloud your judgment. Do you see how this cycle is holding you back from being a great trader? Yes. You could be a great trader if you just remove the emotional parts. And here's the hard truth. Most traders never really overcome this emotional barrier. What if I told you you don't have to be one of them? The elite traders, they found a workaround. They're not superhuman. They just use better tools. You see my AI going on the left side this entire time. We're not there yet. I'll tell you about it later. Tools that you don't have access to, but I can give you access to. Are you beginning to see how this approach is going to revolutionize your trading? We have AI now, my guy. We have ChatGPT. We have OpenAI assistants, and we are so close to AGI. I am going to hold your hand. Doesn't that sound good? Think about it. Think about how many times you missed out on profits or held onto losses because of a gut feeling. Oh, I feel like it's going to go up. Oh, I feel like it's going to go down. I better get out. How often have you wished to just remove those emotions and go back to that emotional state and be like, dang, I wish I didn't do that? Are you tired of letting these missed opportunities and emotional mistakes dictate your trading success? It's like super, super simple. The process, I promised I would show you in the entire process. It's super simple. I've built a framework over multiple years of how to automate your trading. I call it the RBI system. RBI. Research. That's step one. You research trading strategies. So you might already have a trading strategy that works for you kind of by hand, except your emotions or you miss a trade, all that good stuff messes it up. Whatever problem it is, a robot could get rid of all of that. So you research trading strategies, right? After you research those strategies, you come up with a list of strategies, and these are the strategies that you're going to run, your robot's going to run. But first, before you let your robot run it, you simply backtest those strategies. Backtesting is the process of seeing if a strategy worked in the past. It's crazy to me that a lot of traders don't trade after backtesting. They essentially just trade a strategy that they heard works. And then they also gamble on their emotions. Isn't that wild? So you research, remember it's the RBI system, research strategies. You can use YouTube, you can use Google Scholar, you can use Reddit, other places on the internet, use your friends, other good traders. You research, find good strategies, and then you back test them to make sure that they're profitable. Make sure they're profitable in the past. If they're profitable in the past, then we implement them into our bots. And those bots, they trade automatically. 24/7, waiting patiently without emotions. Do you see how much better this framework of trading is than what you're doing? If you're just waking up and trying to get there before 9:30 a.m. so you can catch the open, and then you're going to buy or you're going to sell and then take profit and stop loss, do you see how that's gambling? Because you don't know which way things are going to go, right? So why not use this system, research, backtest, and then implement if it works? That will get rid of 90% of strategies. And then you're just stuck with the 10% that actually work. Are you starting to see this? Now, what I want you to do from here is join this bootcamp. I promise you, it will be a game changer. You'll save not just hours, but days, weeks, maybe even years of trial and error. This took me so long to figure out. You can just scroll down here, click this big red button and enroll now. You're going to be able to fully automate your trading. I make short, concise videos showing step-by-step how to automate your trading. You get 7 full algorithms and all of the code instantly, and you get full support from me and my team. So if you ever have a question, we're there for you. Doesn't a future where your trading decisions are calculated and precise and emotion-free, doesn't that sound appealing? This bootcamp is not for lazy people. It's not for anyone and everyone. It's for traders that really want to automate their trading and take the degeneracy out of their trading and be able to rely on automated systems 24/7 that you know are emotion free. So you don't have to be a seasoned coder or anything like that. I did not know how to code when I started out on this journey, and it was so hard to learn because nobody was sharing this information for obvious reasons. I mean, you see my AI doing this process for me now. So I'm like light years ahead, and I want to bring you up to speed because I know nobody else is going to share this information with you. Now, this AI. Do you remember the process I taught you earlier? The RBI system, the research and then back test and then implement. This AI, this entire time, has been coming up with strategies, writing out the strategies. So they're doing the research on strategies and then coding the back test so we can see if the strategy is profitable. And it works for me 24/7, 365. And as a bonus, if you join the bootcamp today only, by clicking this red button, putting in your email, you're also going to get this AI that will do the RBI process for you and take 80 to 90% of the work off your plate. Isn't that amazing? It's crazy. We've had countless people go from absolute beginner. So even if you haven't coded a day in your life, from absolute beginner to success, you can see all of the testimonials down here. Scroll through them, and there's even more down here. This guy says he paid a year in advance, and he also goes to Harvard for computer science. You don't need to go to Harvard for computer science, but it's crazy that we have people in here that are even in hedge funds that are copying my scripts. This guy says, yeah, funny thing is, MoonDev has the attention of hedge fund companies copying his scripts. Please don't put old traders above yourself. Doesn't matter if you're getting started now or you've been at this for a long time. You're probably struggling from these same emotional things. So go read these comments and testimonials at the bottom of this page. After you've done that, click this red button and join, because consider this. You're literally sitting here trading these charts, gambling your life savings. If you spend the tiny investment to join, you're going to learn exactly how to automate your trading. So for the rest of your life, whenever you have a new trading strategy, you are going to be able to automate that strategy. Let that strategy run on whatever exchange you want, whether you want to trade crypto, stocks, Forex, whatever. You let that strategy run and you see the results. Because remember, the process is research strategies, back test them so you see if they're profitable in the past. If they are profitable in the past, then you go ahead and build a bot for, and I show you every single step. So I show you how to research, I show you how to backtest, I show you how to implement into a bot. So you'll be able to then run that bot knowing that the backtest was profitable, and you can apply this to any type of market that you want: crypto, stocks, Forex, futures, whatever. And think about this, bro. You're gambling your life savings every single day. The worst case scenario, let's talk about the worst. Let's talk about the best case first, of course. You're able to automate your trading 100% for the rest of your life, and you never have to sit here and try to hand trade again. And all of your strategies that you have that are profitable can run in bots for you 24/7. Obviously, that is the best case, but the worst case scenario is you learn absolutely everything. You know how to code now, and on top of that, you can qualify for $100,000, $200,000 plus jobs at any tech company, because that's what they're paying these days. So you can sit here and go the rest of 2024 just like you did 2023 and try to gamble on these charts, essentially like an old lady that goes to the slot machine and smokes her cigarettes all day long. You just click that button and gamble and gamble and gamble until you lose all of your money. Or you can take a small chance. After all of these people have already had success in the same situation you're in, probably found me on YouTube, come over here, watch this exact video, and then they've had success. So why can't you? Look, I believe code is the great equalizer. That's why I show all this stuff. Most people in my position would never share edge like I do here. My edge is that I can automate any strategy at any time. So every time I come up with a new strategy, I back test it to make sure it works, and then I implement it into a bot. In this bootcamp, I show you step by step exactly how to go from where you are as a beginner to an fully automated trading strategy. a fully automated trader with every single strategy that you want automated, which is crazy. Isn't it worth exploring the risk-free opportunity to revolutionize your trading? It's literally risk-free because there's a 100% money-back guarantee. If you ever feel like it's not for you or you just don't want to do it anymore, you get your money back instantly. You see all of the people that have had success with it. You get my AI, which is absolutely insane because this is AGI for trading, and it's only going to get better every single day, and I'll keep updating it. You can read a little bit about myself. You can see I have this beautiful CryptoPunk, but I feel like code is the great equalizer, and for the longest time, I didn't know how to code. I was scared to code. I was doing 100 different projects, hiring developers from around the world to build everything until I realized, hey, if I learn this coding stuff, I can automate my trading for the rest of my life. Opportunities like this don't come often, and I will not keep this open forever. The secrets I'm showing are powerful. And frankly, the big players, they're inviting me to their offices and shaking me down because they don't want me to share this. Are you ready to seize this chance before it's gone? Because it will be gone. So if you've ever traded emotionally, if you've ever wished you could have your strategy just automated, if you ever wish to have an automated trading bot so you could spend more time with your family, with your friends, do things that you actually want to do in the day, then take the small chance and make the tiny investment in yourself to automate your trading. Join now before it's gone. You get access to absolutely everything. You can go ahead and scroll through this page, see everything you get access to. Essentially, I'm going to hold your hand step by step from where you are now to a fully automated trader on whichever exchange or whichever market you want to trade on. I give you a bunch of algorithms that you can learn from. You have a 100% money back guarantee. You see all the people that have had success with this. You get my AI for trading as well. Don't miss this opportunity because it will not be here for long. Click that red button right now, put in your name, your email, your billing information, and you get everything instantly. But it won't be here forever. If you fucked up some trades due to your emotions, or you just missed some trades because you weren't there, it's time to automate it entirely. In the next few minutes, I'm going to show you how to automate your trading. Even if you're not technical, you've never done anything technical in your life. I was just a degenerate like yourself prior to this. If you don't watch this full video and you just go back to gambling in this casino, trading in this stock market or crypto market, yes, it's totally not gambling, you degenerate. I was the exact same way as you until I realized, hey, a normal person can algo trade, a normal person can automate their trading, so why can't I? So if you fucked up 2023 and you don't want to do the same thing here in 2024, don't do the same shit as you did in 2024. Imagine if you could turn every trading decision into a winning move. No matter what the market throws at you. In the next few minutes, I'm going to show you absolutely everything. I'm going to reveal all the secrets that the trading elites don't want you to know. They're guarding it fiercely. The secrets that will transform you from a emotional degenerate trader that's buying highs and selling lows and getting wrecked every single day into a precise automated trader that can go live their life, enjoy their time with their friends and their family, do the activities they want to do because they know they have robots trading for them. Even if you've never been technical, I will show you the exact secret. Have you ever been caught off guard on how quickly your emotions just sabotage your trade? Obviously, you have. You probably bought up here and then sold down here, right? It's a thing that we do as humans. It's a common struggle. Don't worry about it. I was in the same boat as you. And stop looking over at my AI. We're not there yet. Later, I'll show you my AI that does a lot of this for me. But doesn't it make sense You're a human being. These charts are not meant for us to trade. It's not your fault. Our brains are wired to let emotions take the driver's seat, especially under stress. Do you see how much better your trading will be if you can remove those emotions? Yes. When you're emotional, you can't think logically. You do things that you shouldn't have done. And you know that. You regret it later, right? You get into a fight and you say some things that you might not want to have said. And then you look back and you're like, oh man, I was just emotional in that moment. Yeah, of course. That's how it goes over and over again in real life. Now you bring those emotions to the charts and the casino. Whatever it is. I'm working, right? Oh yeah, I'm working, trading these. Come on, bro. You know you're not working. This is gambling if you're trying to do it by hand. And I get it. It's frustrating. Emotions take over. And let's face it, this emotional roller coaster can make trading a nightmare. You probably have a good strategy or you've heard of good strategies, but executing them, no way. Emotions just wreck everybody. Every time you trade, those familiar feelings just resurface and cloud your judgment. Do you see how this cycle is holding you back? I actually want to go ahead and dive into ChatGPT a bit and say this. I have liquidation data. Pretty much all liquidations that came through on crypto exchanges. I've found that the liquidation data does a good job of indicating when to buy or sell. For example, if you buy when it hits $10 million liquidations, that, and then sell X percent later with a X percent or Y percent stop loss, that strategy does really well. The problem that I encountered was the liquidation price is the price that they get liquidated at. And pretty much only the exchanges get that price, that entry price. So the back test, of course, it makes sense that it does really well, right? My thought here is, how can we use machine learning? What models would be best to use on this liquidation data? And what type of buffers can we put in, or some sort of regularization or something along those lines of how to essentially make it so we can have a more robust back test. I know these are kind of two different questions here. At the end of the day, I think the next step is using some machine learning models to see if we can pull extra alpha out of this backtest data. But I wanted to make it clear that I've backtested this before and it looks really good on paper. But those entries, I think, are the caveat there. Please give me a list of the absolute best ML models that you think will be appropriate for this type of data and predicting price. Give me your top 3. Thank you. Okay, so should I use deep research on this? Nah. Yeah, let's do it. Let's do it. So deep research, I got this. You got it too, probably do. We all got it. We all got the same AI. Just who has more energy? I probably do. I'll probably outrun you, dude. Okay, it's getting competitive again. I'm sorry. Let's do this together. 777. Much love to you, my brother. Thanks for the detailed context. To recommend the best machine learning models for predicting price action from liquidation data, could you please clarify the following? Previously, for features, I was looking at X amount of liquidations for Bitcoin. I have all liquidations for all symbols, essentially. I have the direction, the time it happened. My previous tests, I was using a I was rolling the time together in time frames, like 5 minutes, 10 minutes. That was for the back test. The resolution is every time, every second. So it's tick level pretty much. I'm trying to predict short-term price based off of the liquidations. That's my target. We have data to open, high, low, close volume data, but I don't think it's needed because the liquidation data here, I'll give you an example of the liquidation data here below so you can see everything it has. I have 1 year of liquidation data, but this will be an intraday strategy. So I think 1 year should be enough. All right. So, I mean, will it be enough? I don't know. I don't know, dude. We'll see. We'll see. I'm not here to say all that. I'm not right. I'm not wrong. I'm more likely wrong. I'm usually wrong, and that's fine because that's how I become right. See, the thing is if you're too smart, dude, you're scared of being wrong. So you won't try things. So whenever anybody comes at me with negativity, I know they're just too smart. And I can't help people that are too smart. If you're not ready to learn, baby, learn so you can earn, baby, earn, then I don't know what you're doing here, dude. Learn, baby, learn. So you can earn, baby, earn. Crypto data here. I must have my liquidation data somewhere. So I'm looking for it. Yahoo data. Research. Coinbase, GE data, IB data, Moondev API. Oh, why? I found it. Okay, open interest, lick data. Okay. It's a lot. It's 1.3 gigs. Damn. Oh, that's not even where I'm putting it, bro. I need to put headers on this, honestly. Yeah, I do. So where can I get the headers? Well, I can just go in here probably. Yeah. Go here, copy and say CD up into there, B. And then code dot. Okay, so just go ahead and give them the headers here. Lake, big, lake. Above is some sample data, but you can see there's no headers on it. So here's a piece of code that I run on the above data so you can see the actual headers. Okay, there we go. See what she's got. Let's see what she's got. Let's go ahead and add this to GitHub. Intraday, okay. New terminal. Get add dot get commit slash new back test. So intraday BB, okay. Let's get this up here really quickly so you can remember this is not financial advice, but and I'm not a financial advisor. And I'm not a financial advisor. 1, 2, 3.
No, it's what's called machine learning. So you find things that are predictive. You might guess, oh, such and such should be predictive, might be predictive, and you test it out in the computer, and maybe it isn't, maybe it isn't. You test it out on long-term historical data and price data and other things, and then you add to the system this if it works, and if it doesn't, you throw it out. So there aren't elaborate equations, at least not for
At least not for. Repositories here. Oh, I didn't push it. I was gonna say, dude. Say, man. So I just added this to the GitHub here. 3 minutes ago. Perfect. Back test. Perfect. 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 Dun dun dun. Beautiful, beautiful, beautiful. So now let's go see what ChatGPT had to say about this. So she's still working on it. Great. Thank you for your detailed information. I'll identify the top 3 machine learning models that are well suited for using tick level liquidation data to predict short-term price movement. I'll also look into strategies for making the backtest more robust and realistic, particularly given the issue with unrealistically favorable entry prices. Wonderful. That's exactly what we wanted. That's exactly what we wanted. That's exactly what we wanted. All right, so let's wait for it. Do some push-ups. All right, it's got 25 in. Cool 25 push-ups. Cool 25 push-ups for the day. Got 25 in earlier. Okay. Got 50 squats. Okay. Okay. I can feel the blood flowing a little bit better now. That's all I needed. I got the chills now. I'm gonna get 25 more in because that was hard. And we still got more time. It's looking at UPenn. Remember what I asked her was about the liquidation data. I got data others don't have because I'm a data dog. 25 more, 25 more. All right. We're at 75 for the day. 75. I need to get that up. I felt good though. We're still, AI is working for us. AI is working for us. That's good. That's good. That's good work. That's good work. Good job. Good job. Good, good, good. Good, 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 dude. Good, good, good. All right, we're still going, so I'm gonna get 25 more. Just get to 100 real quick, you know? If still gotta wait for it. Might as well be investing in myself, you know? All right, I'm at 100 for the day. That's pretty solid. Pretty solid. Damn, this taking a minute, huh? Quant VPS. All right, I'm winded now. That's good though. That's good. That's good, dude. My gym is closed for 2 weeks. It's 10 more days actually. Which sucks. It sucks, but I can get it in. I can get it in running and doing body weight stuff. Very, very important. Very, very important. I'm looking forward to this though. Let's see what's going on in the other market here. Oh, never mind. We're done. So it spent 5 minutes on it. Nice. All right, let's read through it. So the top machine learning models for short-term price prediction from liquidation data. Download PDF. Damn. Let's download PDF. Funding here. And let's go to Munda data here. Bots. How do we want to do this? Research. Backtest. Bots. Machine learning. Let's just put it there. How about that? Let's download it here. Here it is. All right, so top ML models for short-term price prediction from liquidation. Close this, Mo. Close chat. Okay. Predicting near-term price direction from high-frequency liquidation data requires models that can capture rapid order flow dynamics. Below are the 3 top machine learning models known to perform well in high-frequency or microstructure contexts, followed by techniques to make backtests more robust and realistic. So I know we're going from 0 to 100 here today, but this is how the game goes, you know? You just got to think of ideas. And this is just an idea that I have. Again, it all comes back to one thing, dude. There's literally one thing. Do you remember it? It's 3 letters. Does anybody remember it? The 3 letters, the one thing? I'll give you a hint, bro. Starts with an
I'm
R.
not afraid to die on a treadmill. You might have more talent than me, you might be smarter than me, but if we get on the treadmill together, right? There's 2 things. You're getting off first, or I'm gonna die. It's really that simple.
It's really that simple. Starts with an R, dude. It starts with an R. Nobody knows it, huh? Damn. Nobody knows. Okay, that was just a little pop quiz. Nobody's locked like I'm locked. Predicting near-term price direction from high-frequency liquidation data requires models that can capture rapid order flow dynamics. Below are 3 top machine learning models known to perform well in high-frequency or microstructure contexts, followed by techniques to make backtests more robust and realistic. So we could use an RNN, which is a recurrent neural network. Why it's suitable. Recurrent neural networks, especially long short-term memory, LSTMs, and gated recurrent units, GRUs, excel at sequence modeling. They can learn patterns from the temporal order flow. For example, sequences of liquidations and price responses to predict short-term price moves. LSTMs have shown strong performance on financial time series, consistently outperforming many alternatives in high-frequency price prediction tasks. In crypto and stock experiments, LSTM-based models demonstrated robust accuracy for intraday price direction forecasting, often beating transformer-based models on short horizon predictions, and proving more practical for trading, e.g. handling transaction costs and noise. Microstructure performance. Research indicates that LSTMs and BiLSTMs can capture complex patterns in market microstructure. For instance, an LSTM combined with CNN layers, the deep lob architecture, achieves state-of-the-art results on high-frequency limit order book data. Interesting. This hybrid model could identify subtle order flow imbalances and short-term trends, validating that recurrent networks can extract predictive signals from rapid trade liquidation sequences. RBI, yes, Rabbit, yes, fire, bro. Overall, RNNs are adept at modeling event timing and autocorrelation in liquidation events, e.g. bursts of stop-loss liquidations which often precede price reversals or momentum. Implementation notes, data formatting. Feed the model a sequence of features for each short time window. For example, create time series features such as the count and volume of buy versus sell liquidations per second, price changes, etc. Over the last n minutes, an LSTM can ingest a rolling window of these high-frequency observations and output a prediction for the next interval's price direction. Architecture. Use a small stack of LSTM or GRU layers with possible dropout regularization to capture temporal dependencies. For instance, a 2-layer LSTM with hundreds of units can learn short-term patterns. You may also experiment with bidirectional LSTMs to capture patterns in both directions, or an attention mechanism if looking to emphasize certain event sequences. Research, dude. RBI system. I love it, bro. Robbie's locked. Training. Train the network to classify the next price movement, e.g. up versus down in the next 5-minute window, using a labeled data set of historical windows. Include early stopping and dropout to prevent overfitting. Ensure to do time order validation, no shuffling, so the model generalizes to truly future data. Deep convolutional networks, deep lob style CNN, why it's suitable. Convolutional neural networks can effectively detect local spatiotemporal patterns in order flow. In the context of liquidations, a CNN can identify patterns like sudden spikes in liquidations or clustering of buy-sell liquidations that often precede price jumps. CNN-based models have been very successful in high-frequency price prediction. A prime example is the Deep Lob model, which uses convolutional blocks on limit order book data and outperformed all existing state-of-the-art algorithms on the standard LOB benchmark. The CNN plus LSTM architecture also delivered stable, out-of-sample accuracy on real-world data, showing it could extract robust features from microstructure inputs. The convolutional layers act as feature extractors, filtering the noisy high-frequency data to pick out predictive signals, e.g. a flurry of long liquidations indicating potential price rebound. Microstructure performance. CNNs are known to excel at recognizing shapes or bursts in data. In trading, researchers have even converted order flow data into images so that the CNNs can detect better patterns of activity. The deep lobe approach treats a snapshot of the order book or recent order flow as a matrix and uses 1D, 2D convolutions to capture the shape of supply-demand imbalances preceding a move. For liquidation data, a CNN could catch a signature-like rapid succession of sell liquidations of increasing size, which might signal a final capitulation before price upticks. Such models have proven their worth in HFT contexts by quickly responding to microstructure signals. Zhang et al. Showed that adding convolutional filters on top of LSTM significantly improves short-term prediction accuracy in volatile, high-frequency environments. All right, give me 25, bro. I need 25 push-ups. Let's get it. Let's get it, bro. We're reading. We got to get push-ups in between. Come on, 25. If you got arms, let's do it. 3, 6, 9, damn girl, come on, 12, 15, 18, 21, 24. Oh, that's easy money. That's easy money. That's easy money, bro. That's the most alpha I'm gonna give you all day, I promise. Get your workout in every day. Holy smokes, that feels good. Easy, easy, easy. This is interesting looking at the order book data as well. Implementation notes. Input representation. Construct a time window matrix of recent liquidation activity. For example, use the past 5 minutes divided into seconds rows. And features, columns like buy liquidation volume, sell liquidation volume.
Still to be happy about.
You're up 2-0.
Job's not finished. Job finished? No, I don't think so.
Volume, etc. This forms an image of liquidation intensity over time. A 1D CNN can slide over the time axis, and a 2D CNN can be used if you stack multiple features as channels. Architecture. Use multiple convolutional layers to capture patterns at different scales. For instance, the temporal convolutional networks, TCN, or standard 1D CNN layers with various filter lengths can detect short bursts versus long waves of liquidations. In DeepLob, several convolutional blocks, including inception modules, were used before handing off to an LSTM. You can simplify this by using a few convolutional layers followed by either an LSTM or a dense layer for classification. The convolution filters will act like detectors for events such as a cluster of large liquidations. Training. Similar to the LSTM, train the CNN to classify the next price move using labeled data. Use techniques like batch normalization and dropout in the convolutional layers to generalize better. CNNs are less likely to overfit small temporal shifts, which is useful. A pattern of 10 large liquidations is predictive, regardless of slight timing, and convolution handles that naturally via sliding filters. He said 25 push-ups. This is the type of coding I like. Manual labor. Let's get it. Let's get it, dude. Gradient boost decision trees. So XG boost. Why it's suitable. Gradient boosting tree ensembles like XGBoost and Light GBM are powerful for structured tabular data, and they have been successfully applied to short-term market prediction. These models handle nonlinear interactions of features and are relatively robust against overfitting due to built-in regularization, shrinkage, tree depth limits. In intraday trading research, XGBoost-based models have achieved strong accuracy in predicting price direction. For example, Hung used an XGBoost classifier to predict intraday trend changes and reported satisfactory forecasting performance. XGBoost's advantage is that it can ingest a rich set of engineered features from the liquidation data. Counts, volumes, ratios, recent returns. Softy Store says, yeah, blah, blah, but result question mark? This boy ain't gonna make it. That's the type of dude that does not make it in quant, bro. Somebody that just wants to hand fed to him. You gotta read and put your ideas together, soft. I guess that's why your name is Softy. Oh my goodness. Mike Tyson says you're the type that quits at the slightest struggle. Softy the type that's gonna quit, bro. So reading through things is, I would say, is challenging. It's a challenging part of this game for sure. I don't like reading. You can hear it. I'm not a good reader, but there are secrets in these books, man. Like, books are crazy. And what is this AI derived off of? Every word that's out there. So a lot of books, a lot of books. Once you start reading for alpha, dude, game changes. You're gonna keep going. I'm gonna keep going too. But I need Softy to give me 25 push-ups, dude. SG Boost's advantage is that it can ingest a rich set of engineered features from the liquidation data, counts, volumes, ratios, recent returns, and find complex patterns, decision rules that correlate with short horizon price moves. It's also fast to train and evaluate, a big plus in high frequency contexts, where retraining or rapid inference may be needed. Microstructure performance. While tree models don't model sequences natively, they excel when you summarize these sequences into informative features. Order flow studies have used features like order of balance, volatility, and event frequencies, and tree ensembles often outperform simpler models on these. XGBoost in particular has been noted to improve prediction accuracy and handle large data sets efficiently. Researchers have found it superior to basic machine learning baselines in many financial classification tasks. In practice, you might compute features per 5-minute bin, e.g., number of long liquidations, total liquidated volume, percentage of volume that was liquidated, price changes during the window, etc. And let the boosted trees figure out threshold combinations. Like, if my long liquidations and price didn't fall much, expect a bounce. It's interesting. Tree models are also relatively interpretable. Feature importance can highlight which aspects of liquidation activity are most predictive of the price direction. Implementation notes, feature engineering. Aggregate the raw tick level data, which we have, into features for each time window. Possible features include total count of liquidations and split by the buy and sell, sum of notional liquidated, largest single liquidation event, recent price momentum, order book imbalance, if available, time since last large liquidation, etc. Incorporate a few lagged features from previous intervals to give the model context of recent trends. Model training. Use XGBoost or LightGBM's classifier on these features to predict the next period's price movement, up, down, or stationary. Keep the tree depth moderate to avoid overfitting and use cross-validation to tune hyperparams, like learning rate and number of trees. These ensembles have parameters like gamma, min gain, or lambda, L2 regularization, which can further regularize the model. Performance and update. Thanks to their speed, boosted trees can be retrained frequently as new data comes in, or even online. They also handle class imbalance by boosting residual errors. If needed, you can adjust the classification threshold or apply techniques like SMOT, as in some studies, but often ensuring enough data for both up and down moves. And using proper eval metrics, area under the curve, AUC, etc. I gotta get 25 squats in, dude. We gotta keep going. Techniques for robust back testing. I'm going while I read. Even a great model can lead to misleading back test results. And we assume perfect trade execution or fit too closely to noise. Here are several techniques to regularize the model and make back tests more realistic. Slippage and transaction costs, we've got that. Always account for slippage and fees in your back tests. We already know that. Signal buffering and confirmations. Similar to slippage modeling, introduce a buffer or delay on trade signals derived from liquidations. Liquidation events cause sharp, fast moves, 25 by the way, that may revert quickly. It's often unrealistic to catch the exact bottom.
Like, you just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, the universe is going to get out your way. It's like it's water. It wants to move and go around stuff, you know.
If your model predicts a price, okay, let's see here. This is interesting because this is kind of solves the problem I stated before. Fast moves that may revert quickly, it's unrealistic to catch the exact bottom or top tick. To make your strategy more robust, require a confirming price movement or a time delay before acting on a signal. That could be cool. For instance, if your model predicts a price rise after a flush of sell liquidations, you could wait a few seconds or until price ticks up a small amount before buying. This ensures the move wasn't just a blip and reduces sensitivity to untradeable sudden spikes. I like that actually, the time. Essentially, don't assume you can just buy at the liquidation's exact trigger price. Wait for stabilization or trade at a slightly less favorable price. This buffered approach yields more conservative but realistic entries and will show in the alpha if the alpha survives. Regularization and simpler models to prevent overfitting, apply classic regularization both in modeling and backtest design. In modeling, prefer simpler architectures or add penalties, e.g. use dropout layers in neural nets, limit tree deaths in boosting, or include L1